Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. An interesting combination yesterday of a key reversal down and a bearish engulfing pattern, only just on the latter. However, it wasn't the hardest thing to do, as the previous session was an indecisive doji cross. The market nevertheless still seems to be consolidating and making an attempt at building up the February to date bull channel, currently 106.43 to 111.29. This bull channel is highlighted in bright red on my daily chart. Looking above, we have congestion from the April 2020 low at 107.25 and then the May 2020 low at 107.66, followed by the flatlining medium moving average, currently 108.08, and the slowly dipping short medium moving average, currently 108.82. Meanwhile, below the lower bull channel line, we have the 2020 low at 106.35 and the April 2017 low at 105.68. The 2020 low had previously managed so well to slow the decline and turn the market back up last week, as well as working in conjunction with the April 2017 low back in February and March in doing the same. Below these, we have the slowly rising long moving average, currently 105.16, rising up into the frame, moving up and away from the February and March lows from 2017 at 104.92. So far today, an attempted follow-on lower to yesterday's actions, but not really that convincing, as we are still within yesterday's range, looking like an indecisive spinning top right now. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday as the interference between the market and the slowly rising short medium moving average, currently 124.46, continues to express itself. We are currently in an area of congestion seen in April and mid-March between roughly 124 to 125. Below, we have the interesting combination of the ever so slowly rising medium moving average, currently 123.03, and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. As I said earlier this week, the market is now in a zone between the previously mentioned medium moving average plus 50% Fibonacci support combination below and the combination overhead of the September 2020 low at 126.72 and the 50% Fibonacci line of the June 2016 to September 22 move at 126.99. There's also the possibility of a bull channel here, as in euro dollar, but it's less distinct here, so I'm not inclined to draw it, not just yet. So far today, a small dip, but not by far, as we're still within yesterday's range. Euro sterling. A bearish dark cloud cover pattern type yesterday. Now, I say type only because the tongue on this looks to me a little short, but it still qualifies in all direct respects. Seems the market is now done, at least for now, in moving up and away from the 85.80 support zone. Overhead, we have significant resistance in the 86.69 area from the lows of May. Now, so far today, not much. Looking like a possible immediate countering, if small, bullish harami, though I wouldn't take much to turn this into a small indecisive spinning top or doji cross right now. US dollar against the Indian rupee. An indecisive doji cross yesterday as the market tried to punch up once more and breach the overhead broken upper tie, currently at 82.55, of the October 2022 to January 23 mildly bearish shift pitchfall, highlighted in green on my daily chart. However, once again, the market did not close over it. This move higher has been prompted by the intertwining of the medium and short medium moving averages below, currently 82.22 and 82.17 respectively. The main feature remains the recent bow tie formation of the short moving average, currently at 82.57, the short medium moving average and medium moving averages. This triple crossover pattern sets up the opportunity for a move higher as the moving averages went in and out of the bow tie in the right order and are mainly pointing higher. Additionally, the theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, between the 20th and 27th of June, look out for such a move. We also have, though I am perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue. The market's having difficulties in interpreting this pattern. However, the top side is currently capped by the extension of the upper trend line, the ascending triangle, currently at 82.96, with the October 22 high at 83.26, a resistance beyond that. Now, so far today, a slightly lower open and a dip below yesterday's low before prices moved up to test once more the overhead broken upper time. This is an interesting move as we are already set up for potentially a bullish engulfing pattern, which isn't that hard to do if the market goes higher, given that the previous session was an indecisive doji cross. But should prices carry on and try and move up over yesterday's high at 82.65 and then close over 82.52, then we'd have a daily key reversal up. Such a close was over the upper side. This might well have some interesting implications. US dollar against the Brazilian real. A fourth bearish black crow yesterday and a third consecutive close below the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. This was further bearish pressure from the declining medium moving average, currently 508.82, and especially from the declining short medium moving average, currently 500.81. We also have overhead the lesser Fibonacci lines at 505.73 and 507.39, and a significant 38.2% Fibonacci on the June 2019 to May 2020 move of 510.87, plus the upper time, currently 511 even, of the broken late July to late September 2022 bearish shift pitchfork. Now this pitchfork is highlighted in dark blue on my daily chart. Now this pitchfork is important, as below we have support from the 2021 lower 489.08 and the middle time currently at 487.98 of this pitchfork. There is also the other main pattern here, other than this bearish pitchfork, and that is the November 22 to date bear channel, currently 483.12 to 531.53, which is highlighted in bright red on my daily chart. Even now, after all this time, still sitting over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against Mexican peso. A second bearish black crow yesterday with the lowest close since May 2016. A little way above we have the neckline currently at 1769.59 of the February to April 2021 head and shoulders top, and that's potential resistance. Further up we have the declining short medium moving average currently at 1787.95. Now closer in and still above, we now have the July 2017 low at 1743.62 as well as the August 2017 low at 1756.93. Now looking below, we have congestion at the March 2016 low at 1709.23 and the April 2016 low at 1703.89. However, the key to all that's been going on and the key to the support below is highlighted in dark blue on my daily chart. It is still the September 2022 to date bear channel, currently 1728.22 to 1848.47, and especially the low bear channel line. This bear channel overall has acted superbly in showing the way lower for so long. So far today, a further small attempt lower, moving closer still to the lower bear channel line.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.